Howdy folks, I just started this video and TradingView went down, so let's restart. And let's start on the stocks page this time. So we're short on the NASDAQ and the S&P, and I pointed this out on X this morning. The same thing on both NASDAQ and S&P. You can see our positions there, going back a couple of weeks now, the first one, going back 2 weeks on the last one, and about a week on the second one. And yesterday we rallied back up to this underside of this trend line, formed this lollipop hanging man formation. You'll see the same on the S&P. There's that rising channel line. We're above the 20-period moving average, so that's still bullish in the short term, but we're right up into the corner of this pattern and this triangle. And yesterday we did try and form this lollipop reversal, and we've got a big bearish engulfing candle and a few before that. So all the big candles on this chart are the black ones, the dark ones, the bear candles. So that's always a good thing to look at. The obvious candles there are the dark ones, not just because they're dark, but because they're bigger. Here's the S&P. Same sort of thing. There's the hanging man lollipop, this time with a bearish small body, which some might find slightly more comforting. The body size or shape doesn't really matter, or the color of it, but that's what we've got. And we're also short on the S&P from about a week ago as well. Notice that we've got a very similar pattern rising up to the underside of this channel. First test, there's the breakout. First test, pull back. Second one didn't quite get there. Third test, and now are we going to pull back? Normally the breakout, pull back, the third pullback in that sequence is the most reliable one, I suppose. Just want to go back quickly to the NASDAQ and show you what this looks like here. And there's the breakdown. So we're looking at the red channel here, this inner channel. There's the breakdown, pullback, first pullback, breakdown, second pullback. We did reach the channel on that occasion. Slight pullback, and then, or breakdown, and then pull back to this order block and the underside of the channel again. It's a very, very long-term channel. There are actually two channels. There's an outer sleeve and an inner sleeve. We're still within the outer sleeve, but outside the inner sleeve. Bit of a tongue twister. All right, let's go across and have a look at a couple of other things. Currencies, we're still long on the euro and the pound and short on the dollar yen. We took another position right at the trend line, peaked up slightly through there on the dollar yen, but not too much. Slightly above this rising wedge-shaped, slightly narrowing channel. We need to get back inside there today and down through these moving averages and through this pattern shape. Whereas on the pound and the euro, we're sort of long, but those are just meandering down near the bottom, as you can see on this pound chart. And the reason for this is the dollar index, and I've pointed this out over the last number of weeks. We may need to get up to that line and back into this order block. We haven't done so yet. We've tried. There's the 200-period moving average, so we're above that, but we're still below this critical breakout area. We've had no tests. You could call this a test, I suppose. I think my charts might be going. You could call that the breakdown, pullback. That's the first test. A big breakdown, another pullback. That's where we are today. Can we hold beneath this red zone? And normally I put a blob in there, so I'll do that just for your comfort and edification. And let's put the blob in there. It could get up into that region. And I'm going to draw the blob a bit bigger because it's not a very, very clear zone. And we've got this order block, the 200-period moving average. So somewhere around here is where I expect this to turn around. All right, now let's go. I'm afraid my charts are going to collapse, so I'm going as fast as possible. Gold, we're fully hedged on gold. We took a short, then we hedged it, and basically we're at the hedge level, so nothing's really happening there. I think we might turn around somewhere between 2,750 and 2,850 for a bit of a pullback on gold. Don't be too hasty to short this. It's a very, very bullish market. Wait for the signs. We haven't seen any. We tried yesterday with that bearish engulfing candle. Didn't work out, and now we're hedged. Very, very tiny loss. We took a tiny position, and we hedged almost immediately. So basically at break even there. But we'll see how that goes. We haven't got any direction there yet. We are long on Bitcoin, despite the breakdown back below 68,000. Lots of spike lows down here on the 4-hour. And it was, I suppose, too tempting for this to pull back underneath, because a lot of people went long on the break at 68,000 and the hold above 68,000. This is the day chart. So we held above there for 1, 2, 3, and then the fourth day we collapsed down through there. All of those that went long will have been stopped out, mostly retail traders. The hodlers and the diamond hands will be holding on for dear life because it looks so good. And also probably adding a little bit more on that dip down to this previous swing high, which I did yesterday. I put another 5 or 7, I think 8% back onto my trade. Some of the profit that I took near the top. So we still need to add another 20% onto this. We've still got about 80%, something like that, of our position. 70%, I think. Let's go to natural gas. Still holding here. I did quite a long video on this and some posts on my previous video on natural gas. Still not bullish. I have not yet added on a new long position just yet, although we are above the 20-period moving average on the 4-hour, and we're still below this sort of rising channel line on the 4-hour. It's a long-term trend line, really. I'm not too worried about the fact we've broken down through the trend line. I do like the fact we've broken up through the red trend line. That's a start at least, but we've got this zone above us. Let's have a look at the day chart and then switch across to the Henry Hub. So the day chart, a big bullish engulfing candle, that looks very positive. We've got the rollover coming up next week, so these will start to adjust on some brokers. It's very difficult to trade natural gas with the futures and the rollovers and the contango and the backwardation and getting all the timing right. I do a whole section in my course, the Swing Trading Blueprint, on this. There's a link below. So be super careful in this week leading up to the rollover. That does look encouraging, however. I want to go to the Henry Hub day chart. So I'm selecting Henry Hub natural gas futures at the NYMEX. So here on the Henry Hub, the old familiar chart back down to this 2.25 level, the level which I said was super critical and crucial. We bounced off there yesterday, fantastically. Notice it's also the 200-day moving average here on the NYMEX chart, and we formed this piercing pattern. A piercing pattern is when you make a new low and then close more than halfway up through the bearish preceding candle. And in fact, today we gapped up even on the NYMEX, just a couple of cents. So that's all looking pretty good. Notice above us we've got this blob with the two moving averages, the 100 and the 50, that we've got to get through. We've not yet added on a new position here yet, and I'm waiting to see how this day and this week probably plays out, leading into the rollover on Tuesday next week, I think it is. Yeah, so on Tuesday, the 29th of October, we switched from the November contract to the December contract, and that's coming up next week. So some of the brokers will start to adjust, including my broker at Black Bull, and I think we'll roll over on Friday this week, which means that we'll move into the new price. Let's go across to barchart.com and see what the futures stack looks like. Scroll down to natural gas, click on any of those, and you'll get a short report and a chart and the COT report, which we're not going to talk about today, but then you can also see the futures stack ahead of us. So there's our current price, 2.33. The December contract rolls over into 2.82 as it stands at the moment. That's a massive contango gap of 50 cents. That's going to create all sorts of shenanigans in this week leading up to the rollover. Be really, really careful. Don't bet one way or the other with a big deal, because we don't know what the next contract, the December contract, is going to do. Are we going to close back down onto the current contract, or are we going to keep on moving up as an entire contract? We never know what's going to happen in that case, but let's see how we go. Going back to the chart, I think we'll hold the 2.25 level quite easily now. I like this piercing pattern and the gap up. I really want to see us close above 2.5 again, this blob here and the key 2.5 level, the pivotal level really on the natural gas chart. However, that's looking okay, and I'm happy with that so far. We're still short on WTI. Let's have a quick look at this day chart. There are all our short positions. We've taken profit on some of them, but our last position was up there at about $78.30. We're now trading at $70.29, so still holding above the $70 level, but I think we'll move down. I've had this chart drawn up for months now, and it has not changed. And in fact, we followed this path almost perfectly, and the target is down here at about $61. And then I think once we break down below this huge ledge here, we should be able to drop down into much cheaper prices later on, particularly if things go the way they seem to be going with the US election. So keep an eye on that. That might be one of the best shorts going into next year. Rand pairs, I'm still out of these. I'm not trading these. I'm looking for let's go to the dollar rand. I'm looking for a movement back up to the 200-period moving average, this purple line, and the underside of this huge breakout range. There's my blob, and I think by the time we get there, we might have to move into next year. So somewhere up there, maybe early next year, the rand will pick up a little bit of strength again and start moving down. There is some political consternation after the optimism, and that's driven the rand down. In other words, the dollar rand up. I still think this is probably bearish, this chart, a bit more rand strength, probably down to about 16 rands to the dollar, maybe into the 15s. Right, softs and grains. We have nothing on sugar still because I'm waiting for a pullback on sugar. I want us to get back down into sort of halfway up through this rally, back into the center of the channel. I don't have a channel line drawn on here, but if I did have one, that would be the channel center line. I suppose that top line would form the top of the channel. So I'm waiting for a nice pullback on sugar, an eventual breakout, and some moves up into much higher prices. We're still short on cocoa, and that's looking okay. A bit of a scare a few days ago as we rallied back up into the triangle, but only up to the 78.6% fib, and then a strong rejection from there. Bit of a stutter at the trend line again, or triangle breakout line, and then a strong day the day before yesterday. Yesterday confirmed that with another move down. I'm a little bit concerned that this might be a hanging man candle, but there's quite a big wick at the bottom of that, so it's not really, it's more of a doji candle. We're long on wheat and we're long on cotton, as I pointed out in the previous video. This is one of my favorite trades around this pivot line that we tested the top twice, tested it underneath twice, tested from the top once, so we might need another one still, and then a move up. Cotton's pretty cheap. I have a friend, actually a couple of friends who are in cotton. One's a farmer, so they'll be very pleased with a bit of a price increase in cotton. Folks, I hope you enjoyed that. If you did, please leave a like and a subscribe. See you in the next video. Be careful with natural gas because of the rollover, and I think we've got a pretty exciting remainder of the week coming up. So be nimble, be fast, be safe, and I'll see you soon.
Traps